Bitcoin is an electronic online digital currency, was created about 3 years ago, kind of flew under the radar. Now it's starting to actually gain some traction.
Price is now hovering around $7,000, a jaw-dropping loss of nearly 15%. Just check the numbers, yeah, 15% over the course of the day.
That's exactly a week since one of the biggest, supposedly most stable cryptocurrencies took a massive tumble. It's still down since then, and the crash sent shockwaves throughout the community of users.
Bitcoin, since its inception, has been through multiple catastrophic events, and every time it happened, the mainstream media declared it's dead. But each time, Bitcoin bounced back. Now, not all of us have been here from the beginning. Even those who joined the journey in the last market have seen a fair share of bloodbath in those very markets. Let's take a look at these events that nearly killed the entire crypto market. First, let's rewind to March 2020. The world was grappling with a once-in-a-century pandemic, and fear was the name of the game. Traditional markets, they tanked, and panic spread like wildfire. It didn't spare the crypto haven, causing Bitcoin to crater from a near historic $10,000 to a terrifying $3,700 in just 24 hours. This wasn't just a correction, it seemed like the end of Bitcoin. Even those who believed in Bitcoin from the beginning started doubting it for a moment. But Bitcoin, with the rest of the altcoins, managed to rise from this and went on a bull run with a massive rally. However, the big crash at the beginning botched the bull market, and we didn't see the highs everyone was expecting. Fast forward to May 2021, and we encounter another black swan, the China mining ban. The world's crypto manufacturing hub, responsible for over half of Bitcoin's hash rate, announced a crackdown on mining, citing environmental concerns. This sent shockwaves through the market, with Bitcoin diving by 50% in just weeks. Critics declare the end of Bitcoin, painting a dystopian future where governments could control the network. But again, the crypto community defied expectations. The hash rate quickly migrated to other parts of the world, mainly the United States, proving the network's decentralization. Mining pools adapted, and alternative solutions like renewable energy sources gained traction. China's ban, instead of crippling Bitcoin, accelerated its evolution towards a more sustainable and resilient future. Now let's jump to 2023. Last few months have been a whirlwind of black swans, with three major dominoes falling: the FTX implosion, the 3 Hours Capital bankruptcy, and the Terra USD Luna crash. These interconnected events expose the dark underbelly of centralized crypto entities, their risky lending practices, and the potential to bring down the entire ecosystem. The Terra USD Luna crash stands apart, painting a terrifying picture of algorithmic stablecoin failure. Luna's death spiral, triggering the collapse of Terra USD, wiped out billions of dollars and shattered investor confidence in the stablecoin sector. It cast a long shadow on the entire crypto market, raising questions about the future of decentralized finance and the viability of algorithmic stablecoins. But as always, amidst the chaos, a lesson emerged: the need for rigorous auditing, for robust risk management, and transparency in the DeFi space. The Terra USD and Luna crash served as a brutal reminder that code is not law, and even decentralized systems can fail spectacularly if not properly engineered and governed. Then came FTX and 3AC, amplifying the crisis with their interconnected dealings and exposure to Terra USD. Their collapse exposed the dangers of centralized entities wielding too much power and taking on excessive risk within the crypto ecosystem. But it is also important to underscore decentralization, the self-custody, and responsible investing. 3AC, the once mighty crypto hedge fund, didn't just crash, it imploded like a submarine. But its downfall wasn't sudden. It was a slow motion train wreck in the making, fueled by reckless bets, excessive leverage, and a dangerous illusion of invincibility. It was like a house of cards built on a foundation of debt and speculation. 3AC had borrowed billions of dollars from various lenders using its crypto holdings as collateral. But when the markets turned sour, those holdings plummeted in value. There were desperate attempts to salvage the situation, and they all failed. Margin calls went unanswered. Lenders started knocking on their door demanding repayment, but the cupboard was bare. 3AC couldn't meet its obligations and everything came tumbling down. The fallout was catastrophic. 3AC's collapse triggered a chain reaction. Counterparties were left holding massive losses. Trust evaporated and the markets plunged deeper and deeper into uncertainty. Almost at the same time, FTX was beginning to collapse, and the implosion of such a large entity like 3AC didn't help the situation. The FTX collapse wasn't just a case of bad business or over-leveraging. It was a tangled web of ambition, financial acrobatics, and alleged wrongdoing of good old Sam Bankman-Fried and his merry men. At the heart of all of this sits Alameda Research, Sam Bankman-Fried's trading firm. Alameda held a colossal chunk of FTT tokens, FTX's own currency. Now, this wouldn't be a problem if Alameda was some independent whale, but here's the twist. Their finances were intricately linked to FTX. The report, published in November 2022, exposed Alameda's balance sheet, revealing it was mostly propped up by FTT tokens. It means it wasn't a safe store of value, and in any case, FTX gets in trouble just when they need it the most, the value will plummet, and that's exactly what went on to happen. Investors, sensing the precariousness of the whole setup, they rushed for the exits, triggering a liquidity crisis at FTX. Now, soon after this, Binance announced a potential bailout deal for FTX, but after taking a peek under the hood, Binance called the whole thing off, leaving FTX to face its demise alone, and FTX had no choice but to file for bankruptcy. SBF, Sam Bankman-Fried, the once golden boy, the JP Morgan of crypto, went from savior to suspect with allegations of fraud and mismanagement swirling around him. But the fallout wasn't confined to FTX's walls. The entire crypto market felt the tremors. Prices continued to plummet and Bitcoin went as low as sub $15,000. The FTX collapse may have tarnished the crypto landscape, but it also provided a crucial wake-up call. Now investors are more skeptical about centralized exchanges. Entities like Binance, Coinbase, and KuCoin are forced to show customers their proof of reserves, or else they lose their trust. Even though these events set us back temporarily, they will leave a positive impact in the long run. The call for the much needed regulations and awareness this space is so desperately needed. Now, did you ever think that this is the end of crypto while any of these events were happening? Prices now are approaching highs, but you tell us your thoughts below. Don't forget to like and subscribe for more videos like this. And as always, thanks for watching.